Hello, my fellow traders. My name is Michalis and I'm one of the market analysts here at HF Markets. And I'd like to welcome everybody to the first live trading session of this week. And we're going to be looking at the US dollar against the Swiss franc. Last week, in our latest live trading session, we looked at the Euro USD. We had 3 signals on the Euro USD. All of those have already hit their take profits. Today though, we're going to be looking at the US dollar against the Swiss franc for a couple of reasons. Number one, from tomorrow onwards for 3 days we'll have a lot of volatility on the US dollar because of the Federal Open Market Committee's meeting minutes, also the US inflation rate, and then after that we have the US PPI. So we're expecting a lot of volatility for the US dollar, and over the past week the best performing currency has been the US dollar. Today the worst performing currency is the Swiss franc. So you can see very clearly that there's no conflicts between the two currencies there. One of the reasons why we're seeing the Swiss franc decline is because the Swiss National Bank has already cut interest rates on 3 occasions, whereas the Federal Reserve has only cut on 1 occasion and is slowly becoming more and more hawkish. Now, if we're looking at technical analysis, we want to identify where the market is trying to drive the price. And also, in addition to this, we want to look at if we get a different type of volatility and price movement within the market, how can we alter our trade in order to still be able to benefit from the market? So at the moment, if we're looking at price action, we did get a decline on Monday yesterday. We still can see today we're regaining momentum. If we look at this high here and then we look at the most recent high, we can see even though we saw the decline yesterday, we're still seeing higher highs. If we look at the low that we declined to and then look at the previous low, we can still see we're looking at higher lows as well. In addition to this, if we're looking at our trend line, which is the yellow line here, we can very clearly see we're above the trend line, we're above the price sentiment line, which is here. And if we're looking at the RSI, we're currently trading at the 59 mark. So we can clearly see here the momentum is more in towards the bullish buyers, and we have indications that buyers are controlling the market. Now, if we're looking at the Bollinger Band, we're currently trading in the bullish side of the Bollinger Band, which is also another indication the price will increase in value. And another great factor that we also will continue to monitor is that we're not trading above the Bollinger Band. So we're not getting any indication whatsoever that the price is trading at an overbought level. Now, if we're going to look at from the high of the retracement to the low of the retracement, if we look at our Fibonacci retracement levels, you can see we've crossed above the 50 level and we're trying now attempting to cross above the 0.65 level. If we cross above the 0.65 level, we have further indications that the price is going to increase in value. But if we switch onto a 15-minute time frame, we can see we're trading above the 100 bar simple moving average. Even if we look at a more longer term moving average, such as a 250 moving average, we can still see it. We're clearly trading above that level. And if we look at the latest crossover was here. So approximately 2 hours ago, the latest crossover is also indicating that the price is going to move higher. So we will also are reconfirming the indication that we saw on the 2-hour chart, also on the 15-minute chart, that we are indeed seeing an indication that potentially the price of the US dollar against the Swiss franc will continue to increase in value. And if we switch over to a 5-minute time frame and we look at 3 moving averages here we've got a 13 period moving average, 44 period, and also a 63 period moving average. Now, if the price is going to retrace, if it retraces back into this bracket between the yellow and the green moving average, we're still potentially in an area where the price can regain momentum upwards. How can we look at that as a signal? For example, if we looked at here, we've got upward price movement. It retraced, it moved back into that area between the yellow and the green. when we get to that level and we start to regain momentum, we can see here we start to regain momentum. If we look at the low and count back 4 candlesticks, we use the high as the breakout point. So we've got 1, 2, 3, 4, and the highest level at that area is this level here. So as it crosses back up, we use that as a signal to indicate further upward price movement. So even though we already have an indication that the price is going to increase in value, we could see that from the other chart. If we do get a retracement, it's not an issue. If it retraces back into that level, we wait for it to regain momentum, and as it crosses above the highest point of those 4 candlesticks, then we can use that as an indication as well. Alternatively, if it retraces, ladies and gentlemen, for example, let's say this is the high and then it retraces. For example, if it retraces like so, that's one possibility. What we can do is look at another trade as it crosses above this level. So that's a signal known as a breakout. Alternatively, again, what we could do is draw our Fibonacci levels and then bring the breakout level slightly lower to the 0.65 level there. So that is also another way we can identify where we're going to get a signal to enter the trade. So ladies and gentlemen, we can very, very clearly see here on the 2-hour time frame that we have an indication the price is going to increase. The same applies to the 15-minute time frame. Even as I'm speaking, we can see the price is climbing higher. And the same also applies on the 5-minute time frame as well, because even on the 5-minute time frame, we can see all moving averages are crossed over upwards. We can see we're trading above the trading clouds there, and even if we retrace back to the area between the yellow and the green, it's just a case of waiting for momentum to again rise and increase above. The only area which would indicate potentially not to take any further trades into consideration, bullish trades that is if we're going to cross below the red moving average here. So that's an area that if we're going to drop below there, we can potentially use that as a level for our stop loss, or potentially as an area that if we're going to decline below this area, then we're going to take an alternative trade into consideration. Now, where is that potential alternative trade? Here we can see that even though we're seeing higher highs consecutively, and again we're consecutively seeing higher lows as well, at the moment we're still at a lower high. So we need to take into consideration if the price is going to do something like this, because that is also following the traditional price pattern, because then we have a high, a lower high, a lower, and then a lower low. So that is a potential scenario. So what can we do to look at an alternative? Again, we can very simply draw Fibonacci retracement levels, and we can see the 0.65 level here. So if we decline below this line here, ladies and gentlemen, at the 0.85457 level, then that's an indication that potentially the price is going to decrease in value in favor of the Swiss franc, because we always need to take into consideration an alternative as well. Now, if we are going to look at the alternative, we can look at the 100 level, which is basically the support level as a target, or an alternative is look at the 123.6 level, which is this area here. So that's also an alternative to take into consideration. Now, the volatility and where the scenario, if we're going to look at scenario A, upward price movement, or scenario B, the downward price movement, we are prepared for both scenarios. We've got the signals for both scenarios. Now, whether we're going to look at scenario A or scenario B will also depend on what's going to be released from the meeting minutes tomorrow, the US CPI on Thursday, and also on Friday, the US PPI. If that data is higher than expected, and also if the Federal Reserve is extremely hawkish in their comments, then there is, based on fundamental analysis, possibility for the US dollar against the Swiss franc to continue to increase in value. And don't forget, the best performing currency of the past week has been the US dollar. The worst performing of the day so far has been the Swiss franc. The only thing we need to be cautious about is if it does retrace. But even like I said, if it does retrace, we've got this setup here. It retraces to that level. and then we wait for it to regain momentum. We look at the breakout of the high of the 4 candlesticks, and we can use that as a scenario to enter the next trade, or we can look at the Fibonacci retracements levels. So we have clear indications there, ladies and gentlemen, for both bullish price movements or an alternative bearish price movements. So that's it for today. Hopefully you found today's session educational. In the meantime, goodbye.